Hey everyone, this is Rob Keynes from Gold Silver Pros. Just wanted to let you know it is Tuesday, and that means the Money Metal Summit 2021 second edition is now live. You can register at the link below. It is free conference for you. It will be virtual, so you can attend from anywhere in the world. We have our first batch of speakers and sponsors up. I think you guys will like them, and we'll be adding more as we get closer to the conference. We're going to have a full deck, and it's going to be a good 2-day conference. Also wanted to let you know that we will have an on-site after party. Those of you who've been asking me the last couple of months to have an on-site event will be able to travel to Dallas-Fort Worth, and we will have a 2-hour after session. And then afterwards, if you want to stay and speak to me, we'll have drinks and we can have a nice conversation, and you can enjoy the Dallas-Fort Worth night scene. Look forward to it, guys. Remember, register at the link below. We have a limited number of seats and won't run registration forever. So go ahead and get your seat booked now while you have the time. Look forward to seeing you guys there.
Hey everybody, it's Rob Keynes from goldsilverpros.com. I am down in Puerto Vallarta on a little bit of a business/vacation down here, helping Mr. Marcus from Arcadia Economics scout out places for his big upcoming conference in October called Silverfest. And also doing some networking and marketing for our conference, which is coming up August 19th and 20th. It'll be called Money Metal Summit 2021, and it'll be the second annual of such summits. It will be virtual for us, and we will have a local on-site after party as well for those that want to travel to Dallas and to meet me. So we'll have links in the description for you there. Today, I want to talk about the slam down in gold and silver, why that's the case. I'm going to bring you some quotes from Keith Neumeyer on our recent interview on why he believes that's the case. And then I'm going to talk to you about an update on some mining companies that we've covered that Keith is involved with that I actually like. And I'm going to tell you why I like them. And I do that because a lot of people want me to cover the mining stock. So I'm going to cover that for you guys here. I'm going to go ahead and share screen. We're going to take a look first at the prices of the mining stock. So we see that gold and silver both got slammed down at the same time. Whenever you see this on a chart and it goes from like 1824 down to 1806 in a short period of time, that's basically a price slam down. And those occur whenever there are basically more sellers than buyers in the market. It reduces the overall price in the derivatives contract and in the spot price. But whenever you see it go directly like that down on the line, it's more of a coordinated action, because in a market which supposedly has thousands of traders, it's very difficult to have that type of price action when you're not having multiple people involved in that trade at the same time. And you can see basically here from June 11th to June 18th, about a 7 calendar day time frame, just the absolute beatdown in the precious metals. And this is on heavy volume, because if you look at the volume on the chart, let's see if we can get, well, the volume's not on this chart, but when you look at the chart, the COMEX trades, you see heavy volume whenever you see these long candlesticks. And I've showed this to you guys before. I mean, it's nothing new to you guys. And the same thing happens at silver. If we replace this with silver on the chart, we will do that here real quick. You see the exact same thing. You see it starting to occur on the 11th and going through the 18th. It's nearly impossible for gold and silver to trade in tandem like that with that aggressive of a pattern, unless there's coordinated selling in the markets. Now, who's doing it? We're going to get some input from Keith on who he thinks may be doing it. He had some really good quotes in a recent video that we did with him. I'm going to share with sound here, and we're going to listen to his interview. I've got 2 segments that I want to go over with you guys. We're going to start here at the 40-second mark, our interview with Keith.
Yeah, it's interesting, because if you go back and look at the 30-day chart, or the 30-year chart, and look at each month and how metals trade, gold and silver predominantly, you'll find that October through February is generally a pretty strong period for gold prices, and May through July are really your weakest periods. So we just got to get through the summer here, and I'm sure this bull market that we're well into at least a couple of years of this bull market, which I think is going to go on for another several years. But nothing goes straight up, and this is just a pause, and what's going to be, I think, much higher prices to come.
Yeah. The saying in financial markets is usually sell in May and go away, and typically we'll get a rebound somewhere, as summer nears end. Is that pretty typical for the precious metals markets as well?
Yeah, I think so. It's not a perfect science, and it's not every single year. I remember 2016 was quite a different year, where we started, January of 2016 at $14 silver, and by July we're at $20 silver. So it obviously wasn't the same as it is right now. But we had $30 silver just recently, not that many months ago, and now we're at 25.
There we go. So he's basically highlighting, there are exceptions to the rule. The precious metals market is not just always cyclical from a seasonality perspective. And there could be other reasons why, that trade gets affected. And there could be exceptions to the rule where the trade goes straight up because of the market demand. And he pointed out 2016 was a recent example of this. It was only 5 years ago. So it's not like we're having to dig back, 40 or 50 years in history. And then I went on to ask him about what else could be affecting the markets. And there's a really good quote and really good discussion he has here for about 3 minutes. I'm going to play this video and we're going to listen for Keith's perspective on what could be happening in the precious metals market, and especially with a silver piece on who may be affecting that market.
We've got the premiums blowing out on the retail product. Do you think that is, from your view of producing silver, do you think that that's also affecting the industrial side of that market, or do you think it's limited to retail?
I think it's made the industrial side nervous, for sure. Going to First Majestic, because you're asking me about silver. So, and yes, I do follow it very closely. Our stock was one of the stocks that was chosen by the whole Reddit crowd. The share price hit, I think, over $30 that intraday, that one day when things went a little bit crazy. And, but what it's done is brought a whole brand new buyer into this market that wasn't there before. You have this millennial crowd that, didn't know anything about gold or didn't know anything about silver. And, all of a sudden now, with this whole new Green Deal and the whole printing of money that's continually going on, and the millennial crowd, obviously is seeing what the big banks are doing, and how much money that's been made, in a very a small group of people. The concentration of wealth that's been occurring over the last year, I think is upsetting a lot of people. And, this is, the birth of this whole new millennial group, and we call them Reddit or Wall Street Silver. They come under different names, of course, but, Robinhood is another one. But, the industrial guys, they're pretty well taken care of, right? So, the Sonys, the Teslas, Panasonics, BMWs of the world, the big banks know, how much metal they're going to consume, whether it's, gold or copper or silver, they kind of know, right? So if you're, Sony, you're going to put your order into JP Morgan or HSBC or whoever you're dealing with and say, hey, well, I want, 50 million ounces of silver delivered to these variety of ports around the world so we can produce our gadgets, and they sign a contract, and that metal shows up over that year. So that bank is now goes out to the miners and ties up a bunch of the supplies they can, or at least does the deals to fill that demand, and they're good at it. They'll also they manage the price of the metal as well. They go into the futures markets and try to manage the price so that these forward sales that they're doing to the big consumers, they don't get offside on those trades. So it's really very much in their vested interest to kind of keep some stability in the market, so they don't get offside. And then lo and behold, you have this new whole group of people, the retail buyer, coming into this market, screwing up their game, and it wasn't really expected, and I think they're panicking. I think that, some of the action that we've seen of late, this invisible hand at $28 silver and $1,900 gold, it's just like every single time both metals hit those kind of magic numbers, they would get slammed. And you just say, oh, geez, like this doesn't really look natural, right? Because a natural market wouldn't act like that. Right? And so there's something going on behind the scenes.
So that's a very good point that Keith makes. Something else is going on behind the scenes. And he went on to talk about some of the vested interests or who may be playing in that market and why they would want to have silver or gold at a certain price. And I think his comments are very instructive there. And I thought it was such a great segment from him on that video that we had back on June 21st, almost exactly a month today, where he came on the channel. Wise comments from him. I don't think it's just a seasonality. We have to be careful in the gold and silver market of just talking about seasonality. We have to talk about who is in the derivatives market, because that's what determines price, and why they want it to move a certain direction, who the powers that be are, and who all the traders are. And sometimes it's, the smaller traders that can have an effect, but a lot of times it's these concentrated positions. But I do think that overall, gold and silver prices are going to move higher. I'm very bullish on those. I think the market for both is very good. And with that, I think we're about to hit our next up leg of gold and silver. I've said that many times. I think as we get closer to the dollar reset, that's going to occur. So what I'm doing right now is I'm looking at companies that are really undervalued, that have good management teams, that are in tier 1 jurisdictions, that have established ounces in the ground and look like they're going to be very profitable, because now would be the time to buy. The mining stocks are not reaching any sort of cyclical peak. And we're not talking about the cyclical peak in gold or silver yet either. So that investment will come back in. The big entities will start to come back in and invest big money when gold and silver hit their next stretch. But what we want to do now is identify good companies. So I'm going to talk about one that is a Keith Neumeyer company, apropos to having him on the presentation today. And that's one I've covered before, and that's First Mining Gold. You can find it on the Toronto Stock Exchange under FF, under the OTC QX here in the US under FFMGF. And I'm not going to go over the whole presentation. I want to emphasize a couple of key points about why I like First Mining Gold and why I have them represented on the channel. I like First Mining Gold because they're an undervalued company and they fit the value investing approach, but they also have a great management team, a great project, and they have great fundamentals. And that's what I look for. If you look at what's happening in the gold and silver market, we're not quite to our next leg cycle up, in which you're going to see much, much higher gold and silver prices. And so everything is cheap in the market. Not only is physical cheaper, but the stocks are cheaper. And we want to identify stocks that we think are going to do well, that check all the boxes. So I'm just going to take you through a few slides here of First Mining Gold, because I think a few things are really what I want to focus on that really provide the value proposition here. First of all, they have great ownership. 2.2% is owned by First Majestic, 3.1% by management directors, and 15% institutional. If you look at some of the analyst coverage down here, Cantor Fitzgerald, Cormark, and HCW, they basically are valuing the stock at between $1 and $1.30, but amongst them, and it's trading at a fraction of that, about a quarter or a third of that at current price, depending on when you're watching this video. So what that means is everybody thinks that they're going to do very well. And the fact that a stock of this size even has 3 analysts on it, the reason why is because they have a great management team with an established track record, they have a great deposit, and everybody thinks they're going to do well. Analysts don't cover stocks that they don't think are going to do well, because first of all, they're providing recommendations or research really to the investment market, and they want to provide winners because that's what they get paid for. And the institutional investors only come into stocks which they think are going to do well because they're putting a lot of money into it. And they have so many different targets in the space, they want to find the ones that they like. So overall, people are very bullish on this, that are in the know in the market. The Spring Pole project, one of their projects, the one that's most advanced and the biggest one, the net present value of that, the accounting term for what it's actually worth when you consider the time value of the metal, the profits minus the costs, or the revenues minus the cost to get the profits, that accounts for about 4 times of First Mining's current market cap, meaning the company at current metals prices is worth 4 times more than it's currently being valued at. And we're not even talking about what happens in a rising precious metals environment, which every new dollar is going to add directly to that bottom line and make the company worth much more. And if you want to look at in comparison, First Mining Gold is valued at about $21 an ounce gold, whereas the gold developers average is $61 an ounce. So they're way behind their peers, and $83 an ounce for an advanced developer getting ready to do that mine decision and build the mine. So they're at about a third or a quarter of what their market capitalization could be comparative to their peers, because they just, there's not enough money from investors into the market, to value all these companies appropriately. So we're finding a value investment, one that has good fundamentals, one that's undervalued by the market, and that's the value investing approach, and that's a Warren Buffett approach. And again, we're talking about in the current precious metals environment, not what's going to happen when you see that repricing of precious metals, when you see, that reset in the US dollar, and when you see the market begin to reflect true fundamentals when gold and silver are rising. So that's First Mining Gold for you. I think it's a great company. There are several things to pay attention to there. Essentially, there are a couple of bullet points that I want to highlight for you that are the core value proposition. They're a very undervalued natural resource company. The most important asset is called Springpole, which happens to be one of the few gold development projects that can produce 300,000 ounces per year in a tier 1 jurisdiction. That's in Ontario. Pre-feasibility study completed with a net present value of almost $1 billion at $1,600 gold, meaning they're priced about a quarter of what the value of that gold in the ground is, net of costs. And that's at $1,600 gold, not at $1,800, which we're trading at now, and not at $2,500, $3,000, whatever that gold price is going to get to here in the next few years. So they are very undervalued. They have that pre-feasibility study. They're definitely a stock worth looking at. And for those that had invested in them, they were just approved by the board of Treasury Metals to get some shares of Treasury Metals as well, which is another of the new Meyer companies and one that has a relationship to First Mining Gold. So I'm going to give you a quick look at Treasury and who they are just for a moment because they're related. They have 3 different projects Treasury Metals does, Goldland, Miller, and Goliath. And they have a lot of ounces in the ground that they have measured, indicated, and inferred at these 3 projects. And so that is another potential target for you. I'll let you do your research on Treasury Metals. I just wanted to mention them really quickly. But First Mining Gold is our true target here. We think they're a great company. They're led by great people. They're undervalued. They have that pre-feasibility study. They're followed by the analyst. They're not valued to their peers. They're not valued at $1,800 gold or $2,500 gold. That's what we look for in the market, and that's why I wanted to bring it to you. And going back to Keith's comments, you know, the market is really not pricing gold and silver correctly right now. The reasons, we know the reasons why that eventually is going to happen, and the money is going to flood back into the mining sector. That always happens. When you have a rising gold price, money flows into all resources, not just gold and silver, but it flows first to gold and silver as precious metals because those are safe haven assets and the big sexy projects that people want to look at. And then eventually will flow to the base metal projects as well and the other projects. So when that happens, you're going to see tremendous flows into the mining complex, into gold and silver, and a good company position like this in First Mining Gold, which has that good story and that good provable project, that pre-feasibility study, is going to do well. So if you're positioning for that, this may be one that you want to take a look at for your portfolio. Thought I would bring you an update on that because that's what we do. Lots of our subs want to follow the mining stocks. Now, if you're not in the mining stocks, you're just in the metals. The good news from this video is Keith Neumeyer provided great insight into why he thinks silver and gold are going to rise in the future. I believe him. I think he's one of the best advocates for this sector. I think he's one of the most intelligent and one that speaks plainly and truthfully. And I appreciate having him on his program. So I kind of wanted to do a little bit of an encore of that because it's so important what he said about the market and how the price is determined, especially with Basel III, especially with what's going on from the gold flowing west to east, from the US and London over to China and Russia and the Middle East. You're seeing that happen in the gold and silver market. So we're going to see that eventual repricing of gold and silver. That is coming along with the eventual death of the current iteration of the US dollar. That's going to be very good for the precious metals, and it's going to be very good for the mining companies, which are leveraged on top of that precious metals price. So if you're identifying targets now that you want to get into that have good fundamentals in the mining space, it's just the same value proposition as valuing getting into the metals as well. You should be positioning yourself to get nice gains and protect your wealth over time, as well as growing your wealth over time. The stocks are a good way to do that. All right, this is going to wrap it up for today, guys. Hopefully that was valuable to you. I'm going to continue down here in Puerto Vallarta to produce more videos and provide you more content, as well as talking about the conference, which is coming up, Money Metal Summit, August 19th and the 20th, which is going to be online, but we're also going to have on the 19th and basically in Dallas to get together for everybody that wants to join a little after hours session, which will be a lot of fun. Look for links below in order to sign up for that. It is free for you guys. And remember to like and hit the notification bell below. Until next time, this is Rob Keynes with Gold Silver.